Hi guys, welcome back to the channel. This video is about the relationship between internal range liquidity and external range liquidity. So let's get to the PowerPoint presentation before we come back to the chat for more example. We are going to start by looking at what is internal range liquidity. Internal range liquidity are in form of fair value gaps, and this we have a bullish fair value gap and bearish fair value gap, while external range liquidity is in form of swing high and swing low, and then in every swing high we have buy side liquidity, and in swing low we have sell side liquidity. So let's look at the relationship between the internal range liquidity and the external range liquidity. Here in this chart we see price has taken out external range liquidity, and then price will be seeking internal range liquidity because price does one of two things, which is price seek liquidity in form of internal range liquidity and then liquidity in form of external range liquidity. And here we see price has taken out external range liquidity while leaving the internal range liquidity, where price will be the next target for it. And then we see price entered into the internal range liquidity. Then what will be our target? This external range liquidity will be the target, and we see price has respected the internal range liquidity, so external range liquidity will be a target. We see price has what? Seek external range liquidity. So let's get to the chart to see more examples. Here we are on a chart and we are on daily time frame. What do we see? We see price has entered into an internal range liquidity in form of fair value gap, and then where will be the next target? The next target will be this all high, which is buy side liquidity. Let's replay and see how price react to the point. So we see price has taken out the external range liquidity. Now where will be the next target? The next target will be the internal range liquidity, and we have this fair value gap at this point. Let's see whether price will be coming to this fair value gap. The price has left this fair value gap open, and sometimes price will violate the rule, but it's okay. What we need to do is to follow what price is doing while trading. So here we see another external range liquidity that was scrapped at this level, and we don't have internal range liquidity. So what are we going to be doing? We'll be following price action to see whether price will create internal range liquidity. So what do we see? We see price has created a fair value gap, and that is an internal range liquidity. So we see price has come into the fair value gap. You see, so this is now respecting the internal range liquidity. Where will be our next target? Our next target will be external range liquidity in form of all high, where there are buy side liquidity. Now price will seek the buy side liquidity. Let's play and see. So we see price violated this fair value gap, but price is yet to close below the fair value gap. And if price should close below the fair value gap, then probably will be seeking an old low. Now, when you are trading internal to external range liquidity, when you're using the model, it helps you determine the bias, the daily bias of your top-down analysis. So internal external helps you determine where price will be going and where price won't be going. So here we see price respected the fair value gap again, and we see price is about to take out the external range liquidity. So we see price has taken out external range liquidity. We see it's a very tight small sweep of liquidity above this high. We see price has taken out the external range liquidity. Now, where will be our target? Our target will be internal range liquidity in form of fair value gap. And here we have a what? A fair value gap. So let's see how price will react at this fair value gap. Apart from this fair value gap, we also have another fair value gap below it. So we have two fair value gap, and it is very important for you to mark the two fair value gap and see which one price will react from. So we have two fair value gap. Let's see how price will react after taking the external range liquidity. Now, price has entered into the internal range liquidity. Where will be our target next? Our target will be external range liquidity. But however, we see a fair value gap below here, which would be at the discount price level. But let's see what price will do. So we see price violated this fair value gap. Now, as soon as we see price violating this fair value gap, what are we going to be expecting? We'll be expecting price to come back, have a test of the fair value gap, where we will have an inverted fair value gap before we will see further down prices. But let's see what price will do. So what do we see? We see price coming into the fair value gap and have a retest. Now, this inverted fair value gap has become an internal range liquidity. Why? Because we see external range liquidity has been taken, and this fair value gap, this inverted fair value gap, has become a high probability fair value gap. Why? Because we see external liquidity has been taken, and we see price violating this fair value gap and having a retest of this fair value gap. Now, what do we have? We have a new fair value gap on the left, on the right, and this new fair value gap on the right coincide with the fair value gap on the left, which we have a balanced price range. So when we see two fair value gap, now we have a balanced price range. But this is for another topic. But let's continue to see which price, where price will be heading to. Is it going to be taking this internal range liquidity before this external range liquidity? Let's see what price will do, because we have external range liquidity at this level. So external range liquidity has been taken. Do we have a fair value gap yet? No, we don't have a fair value gap yet, because this price candle has not closed, but we have a fair value gap above. Let's see what happened. So price has a retest of the inverted fair value gap. Price is respecting it. So let's see. What do we see, guys? We see price creating a failure swing here, which is also a draw on liquidity, but we're expecting price to take out internal range liquidity or come back to take out external again. So we see price reacting at the level, consolidating. So we see price taking out external range liquidity here. So after taking out this external range liquidity, do we have an internal range liquidity in form of fair value gap? No, we don't have it. So price need to create an internal range liquidity for us to have a clear direction. So now, because this is the only fair value gap we have, if price should close above it and have a retest for an inverted fair value gap, then price will continue bullish. But so far, we don't have that. So here we see price is about to take the external range liquidity. What do we see? We see external range liquidity taken, guys. External range liquidity taken. And what do we have? We have now a fair value gap. We have a fair value gap in form of internal range liquidity. Let's see how price will react at that point. So we have a 2 fair value gap now. We have another one here as in form of external range liquidity. Why? Because we see this low being taken out by price. This low has been taken out. So let's see what price will do. So price has retested the fair value gap and then went back again. Now, if price will close above this, we're going to go into this fair value gap. So we see price has closed above it. So this fair value gap will be the target. Why? Because this fair value gap is a discount price. So this might likely hold. If this did not hold and price close above it, the fair value gap above will be the target. But what do we see? Price is respecting this fair value gap, and we're expecting price to what? To take out external range liquidity in form of what? Sell side liquidity. Now we see price coming back to retest the fair value gap again. So this is how, guys, you will use fair value gap to determine how price, move. That is, price move from internal range liquidity to external range liquidity, and external range liquidity to internal range liquidity. And we see price has taken out now the external range liquidity and has created a what? An internal range liquidity in form of fair value gaps. So do you see? We see we're expecting price to go back to the internal range liquidity, guys. So this is all about internal external range liquidity. And if you're new to the channel, kindly like, comment, ask questions, and also share this video to people that this video will be helpful to them. Bye. See you next time.